Welcome in to This Week in Bitcoin, episode Lucky 77. My name is Chris LAS.com, JupiterBroadcasting.com. I'm back from my road trip to Austin with a quick pit stop on the way back in Denver. It was really great to see some of you come out to the meetup and say, hey, I'm a Twib listener and I really love Bitcoin. A lot of Bitcoiners in Texas. I guess I'm not too surprised by that. I am kind of surprised by the rest of you, though. I leave for a couple of weeks and everything's just a mess. It was Liberation Day all over again. Trump talking tough about China pushing back. By Sunday, people walking it back. The whole playbook all over again. But during this 2-day period, let's say a 2-day period, Friday to really Sunday, the market just panicked and some altcoiners got completely wrecked. Some altcoins went to zero. You saw story after story of altcoin trader bros that just got completely wiped out. But I wanted to explain this from a Bitcoiner's perspective because it is interesting and there's some big macro winds that are influencing this, and we'll get to that. But maybe you're wondering what happened, or you want a simple explanation that you can explain to somebody else. Why did we go from like $126,000, an all-time new high, and then wick down $20,000 in like minutes? That was a big one. Bitcoin erased $380 billion in market cap in just 8 hours. It was a big one. So what happened? And how do you explain it to somebody who isn't a Bitcoiner? Well, that's kind of where Anthony Pompliano shines. He was on the PBD podcast. Don't love the PBD podcast, but he did a good job kind of explaining it to somebody who's not really familiar with the dynamics here.
As the market corrected in after-hour stock, there's just not that many people who have access to the aftermarket stock. So what do? They look in their portfolio and they say, well, what market is open? What market has liquidity right now? If I want to sell, if I want to change my financial life or my portfolio, I'm going to sell cryptocurrency. And so Bitcoin specifically sold off $13,000, which is a pretty big move, right? I mean, an asset went down $13,000 in a single day. But it's only about 10%. And so if you go back and you look at all these bull markets, historically, there have been multiple 30% drawdowns in these bull markets. And so this, I joke, is like a crypto crash for ants to the crypto crowd. Now to the stock market, if the stock market goes down 10, 20%, they're freaking out. Right. They're talking about the Great Depression. They're, 1929.
More on that 1929 comment in a moment. He's dead on with that.
And all that kind of stuff.
Yep.
In the crypto, again, it doesn't feel good to see your assets go down 10%, but it is still pretty small compared to what everyone has lived through. There's somebody who was chirping at me on Twitter yesterday, and they said, why are you saying that we shouldn't be worried about a market correction? I said, my brother, we've lived through 80% drawdowns in 4 years. Right. I said, your stock market crashes, they don't even register for the crypto people. So I think that plays into a lot of like what's going on with the retail folks.
By the way, it's interesting what you say. The fact that for the regular guys that are trading after hours are like, what do I mess with now?
They don't have access to anything.
They don't have access to anything.
You see, it's clicking for Pat here. I don't think he's ever even considered this. I don't think most people have ever considered this. And it's an important thing to understand if you're going to hold Bitcoin.
Access to anything where they do with crypto. You can track what Bitcoin's doing.
Gold's closed, stocks are closed, bonds are closed, everything is closed.
Oh, wow.
Now, here's the thing, is Trump on Sunday night, I posted this meme, it's like abracadabra, make the markets go back up, right? And what does he do? He tweets out an hour and a half before a futures open on Sunday night. The guy knows what he's doing, and so that, that's fine, understand that. But I think the bigger thing about crypto, and Bitcoin in particular, is if you sold your Bitcoin because of geopolitical uncertainty, you had no clue what you were holding. The whole point of Bitcoin is that it is a non-sovereign asset. It is supposed to be the safe haven that you can go and hold regardless of what any government in the world does. And so I think that's part of what people are trying to figure out now is the hardcore Bitcoiners, they know that. They're looking to buy on dips, but you still get tons of new people who come in. And obviously, leverage plays a huge part of this. And so the big story over the weekend was there was $19 billion of leverage that got wiped out.
Yep.
Now, you can look at that as how the prices went down. The way I look at it is we just reset the entire leverage in the system, and therefore that probably clears us so that we can go higher.
Yeah, and $19 billion sounds like a big number. It's $19 billion of leverage. You put $100 in, right, and you get $1,000 of leverage, but you're actually only out $100 when you get wiped out. But there was some interesting sniping that took place during this tumble, and that is, I think, probably tantalizing to the normies and something that at least should be noted by those of us in the community. And PBD does ask about these profit takers.
But two accounts made $160 million. I don't know if you saw this article or not. The two accounts that placed bets against the market, minutes before the news broke, scored $160 million windfall. Bitcoin dropped 12%. Less popular tokens saw declines as steep as 80%. CoinGlass, a crypto data platform.
I mean, he really has no idea, right? I mean, this guy, he's probably 2 seconds away from launching his own meme coin or already has a meme coin. Like, the point is trying to explain it to people that really don't understand why this is behaving differently than, say, the S&P 500 or their stocks.
Ahead of the sell-off, 2 accounts on Hyperliquid, a decentralized exchange that allows investors to make leverage bets on future crypto prices, place massive bets that Bitcoin would and Ether would fall by day's end Friday. The positions were closed for $160 million in profits. You know, when you see stuff like this is the Wall Street Journal story right there. These guys made $160 million. How much do you know about this story? Do you know much about what happened here?
I've been paying attention to it. So a couple things. $19 billion, if you wipe out $19 billion of leverage, that doesn't mean that people holding cryptocurrencies lost $19 billion, right? If you put $10 in, but you get $100 of leverage, right? You didn't put $100, you put $10 in. So there's some math that I think is a little bit misleading. The second thing is, when prices go down, sometimes people make money. When prices go up, people make money. It's all about what are they positioned, how are they positioned, all that kind of stuff. There is a trend that is happening in America, but also globally, which is the intertwining of finance and entertainment.
This is something that's been on my mind recently, as I've been hearing advertisements for a lot of sports betting. I don't know where I'm hearing these ads. Maybe it's streaming services, like when I watch Pluto TV. Maybe I occasionally check the radio or watch some YouTube TV, and I see these ads for betting on all kinds of things. And they have like all these incentives for you to bet, including like protection against a player getting injured in the first half of a season and all of these like really intricate things to help you make money based on, your sports team stuff. And it just really seems like the betting is getting so pervasive. And when you look at what the banks want to do with real world assets and putting them on blockchain and tokenizing everything, it's all about giving people access to more gambling and more betting 24/7. Like they're trying to capitalize on this trend that the younger generation loves to kind of dabble in this stuff. Where the boomers, they love to sell the tops and buy the tops on the ETFs. But, the younger generations, they got their Robinhood apps, right? They got their Cash apps. I mean, I'm being flippant here, but it's true. And there's a real gambling culture because everybody needs to get rich quick because the fiat just doesn't work for them. There is no savings technology built into the system anymore. And these are the things that are available to them, and they're fun and they're gamified. You don't have to think a lot about it. So I was glad that Pomp brought this point up.
There is a trend that is happening in America, but also globally, which is the intertwining of finance and entertainment. And what you now see is whether it's the prediction markets, whether you see it's the stock market, whether you see crypto, people want something to talk about. I joke all the time, like financial markets have become like soap operas for young people. And so not only is there the gambling or speculation component to it, but what now in crypto is you have on-chain analytics. You can go and you can see what are the positions people are taking, what wallets are moving, right? All this information is almost like kind of new media to them. And so what people do is, oh my God, there's this big liquidation. They immediately begin scouring all this data, trying to find some storyline. Who caused it? Who knew what, right? Who made money here? And so when they find this, they kind of latch on to it. Now, does this person have information about the tariffs? Maybe, maybe not. I don't know. I don't know who the person is, right? And so I tend to think that good investors, they're not paying attention to this stuff. They're just saying to themselves, listen, I want to continue to acquire this asset, hold it for a long time. This is more entertainment factor.
Do we know who these two people are? You can't know who it is. Is it just pure speculation who they think it is?
So there are strong maybe thesis as to who they are because on the wallets at times people can start to identify whose wallet is who.
Got it.
And so in one particular case, there's a guy who's associated with a wallet that they believe is the person who has it. But again, you don't have full confirmation. It's not like they're coming out and tweeting and saying, hey, that was me that made $160 million.
Is this a well-known name or just somebody that's known in the crypto space?
It's not even really
Not even known in that space. Okay.
I will have more of a breakdown on this dump later in the show. But I'll say, I think part of it was the expectations of October. Leverage was through the roof. There hadn't really been a 2% decline in the S&P for 6 months, something like that. So when Trump comes out with a big, tough guy post about China, it's a catalyst the market was almost looking for. So that's an element to it. But there was probably a little bit of sniping in there. We'll talk more about that. But I want to stay focused on the macro for a moment because there's been this talk at Fear since this event on Friday that we are in a 1929-like bubble and that everything's about to pop and that we're going to enter the recession of all recessions. And maybe. And the thing that they point to is the AI spending. But I think there's a missing factor when you look at the AI spending. The tech industry has been the bubble leader, in my opinion, for at least a decade. If you look at who makes up the majority of revenue on the S&P 500, it's been the tech sector for a while now, like 5 or 7 companies. And every cycle, we had IoT and we've had, really since the dot-com boom, there has been multiple, it's been even longer than a decade, I think, of these multiple tech-driven cycles where we just get these massive pumps driven by this huge claim about this new technology is going to change our life. And every cycle, every time we go through this hype cycle, the tech companies move quicker and faster. They hire and they fire and they pivot and refocus faster and faster, and everything gets more feverish. The money raising gets more feverish. The claims get more feverish. And to me, it all seems tied to the fiscal situation in Western governments, as it's become more and more obvious that their situation is unsustainable. The need to have these pumps to generate money and honestly to have a place to put all of this printed fiat, it needs a place. It needs a home. And I think this is perhaps where we find ourselves right now. And surely the CBS News, with their financial reporters full-time on staff, and the people they interview, like Andrew Sorkin, surely they understand this very important moment, right? Or do they instead pounce on a market dip and claim that it's the roaring 20s all over again? Which do you think it might be?
Stocks took a nosedive on Friday after President Trump threatened a big tariff hike on China. Until then, Wall Street had been at record highs for months, which is why we decided to check in with Andrew Ross Sorkin, one of the country's most influential financial reporters.
Listeners to this show know that he's a constant source of frustration. Somebody who has been at the center of the financial world for a while and does a daily show on CNBC seems to miss everything about the current situation.
He's just written a book called 1929 about the market crash a century ago. We wondered if he'd run out of news to cover, or is he alerting us that what's been happening in the markets lately is a replay of what led to the most devastating financial collapse in our history.
I will say, Andrew is also selling a book right now, and so he is going on tour spreading this narrative anywhere that will have him. There's been multiple interviews this week alone with Andrew where he's essentially pitching this.
The story will continue in a moment.
Tuesday, October 29th, 1929.
Imagine the New York Stock Exchange back then. The crush of frightened traders dumping stocks, investors losing their shirts, businesses, their homes, sweeping away the roaring 20s. Walking that same but transformed floor today.
So she asks him, while the voiceover is still going, she asks Andrew at the start of the interview, what's the difference between now and 1920? And Andrew, and his super deep insight, he says, well, everything's digital now. Everything's been digital, Andrew, since 1987.
Everything's digital.
Well, yeah, okay.
And
Andrew Ross Sorkin says we're in our own roaring 20s, the 2020s, with stocks climbing for months, just like then.
the crazy part about this is from 1928 to September of 1929, the stock market was up 90%.
When you say the stock market was way up,
Right.
Immediately I think of now. Are you scared?
I'm anxious. I'm anxious that we are at prices that may not feel sustainable. And what I don't know is we are either living through some kind of remarkable boom, and part of that's artificial intelligence and technology and all of that, or everything's overpriced.
Or we're reliving?
1929. There was so much anxiety.
You know, Andrew is an example of what plagues the financial world today. These people that think they're so smart, but they're unable to learn and adapt. They continue to measure the system from within the system and can't think of anything else. Like, he cannot grasp the idea that we are watching a massive debasement trade play out. We'll talk more about that in a moment. But throughout this interview, they frame capitalism as the villain, and the idea that people want to earn profits is also evil. And then in one breath, they switch to Larry Fink. So they frame capitalism as bad, and then they come about to investing. And while they're talking to old Finky boy from BlackRock, Bitcoin comes up.
He also believes we should be investing in crypto.
Crypto?
It wasn't that long ago that the big bankers, Jamie Dimon, and Larry Fink
That's you.
were saying that crypto was stupid and a fraud.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But, the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
No, of course not. No, of course not. So somehow, Andrew, even though he's on TV every single morning, fart sniffing every little headline that comes out about finance, following every little pamp, he somehow misses that we've entered an era of debasement as policy. And I actually am genuinely shocked by this, because while I was away, and with gold ripping like it is, the quote-unquote debasement trade became the meme of the town on Wall Street. It became the talk that everybody was obsessed with, the debasement trade. Why is gold ripping? And somehow Andrew misses all of this? Explain that to me. I don't know. It gets to me.
So I think that some of what's happening is basically things that those of us in either the Bitcoin space or the gold space have been talking about for years are kind of hitting the mainstream.
This is Lynn Alden, of course, and she's going to give her definition of what this quote-unquote debasement trade is.
In a way, which is basically that there's a increasing recognition that major developed countries, whether it's the United States, whether it's Europe, like large parts of Europe, whether it's Japan, that they're not going to get their public finances in control anytime soon, that their money supplies are going to continue growing pretty substantially, and less so from bank lending and more so from fiscal transfers. And that because of that there's an increased interest in harder assets. Now, when things do hit the mainstream, you have to be a little bit careful because you start to get consensus. And so, for example, after a disastrous 5 or 6 years in global bond markets, like basically the worst bond market performance, especially in real terms, but even nominal terms in modern history, it's natural that people are now extremely anti those things in favor of the things that have done well. Now, I still think structurally those things are going to do well, but there is some kind of caution at certain points. But basically, the debasement trade is the increasing recognition that nothing stops this train, that fiscal deficits are going to keep barreling. Different countries at different speeds, they all have their own unique dynamics, or I actually should say currency blocks, because it's countries, but then in Europe's case, it's also the shared currency, and that these things are long-term. They've already kind of received a kill shot in a way. They've already kind of become unsustainable. And now it's just that gradual realization and then that gradual playing of those cards that have kind of already been dealt.
This is really important to understand. Everything's going to look like, over a long time horizon, like it's ripping. Stocks are going to look like they're ripping. Gold is going to look like it's ripping. Bitcoin is going to look like it's ripping. In the short term, maybe not. But in the long term, it will, because the fiat that it's being compared to will always be devaluing. We're in a period of debasement via policy. We have to, in order to win this quote-unquote AI war with China. And of course, all the other things, like all of the services that the U.S. government promises that it can't afford, or the military engagements that it gets into that it can't afford. Like those will continue as a matter of policy. And so what Andrew seems to be missing is it's going to be ripping for a while. Now, will there be moments of corrections? Of course. But we're probably in a prolonged period of things just looking like they're ripping because what they're being compared to is getting debased. And he can't wrap his head around it. It's really something. Moving on. But it's important that you wrap your head around it. You see, you need to understand that it's Bitcoin. That's going to be the strongest, fastest performing asset in this race. And gold if you're closer to retirement. And you need that stability. These are going to be your main assets. And of course, things like real estate are going to rip as well. But compared to Bitcoin and gold, it's just not quite the same investment. So what did happen to October? Well, you can thank a lot of world dynamics at play, I'd say. We were promised an October pamp, and I think that very expectation actually plays a role. It might have contributed to people over-leveraging themselves, where we just then saw them get wiped out. But I do agree with the spirit. Things have been good. Lots of tailwinds for Bitcoin, legally, politically, policy, public opinion. Things are good. Access to buying Bitcoin is getting better. Gold's been running away, and typically Bitcoin follows gold after a bit of a lag. So why isn't Bitcoin following? Well, it's two things. It's liquidity and it's sellers. It's always a matter of more sellers than buyers. And it's a matter if there is money looking for a place to get stashed and earn returns. And when people are loose with the money and they're looking for places to put it, things like assets get bought up. And this is why I often start the show with macro news. When things start to break down at the global level, it does directly impact Bitcoin in the short term, often negatively and then ultimately positively. And I think we're in a period of that right now, and how people ultimately react to it, like, it really makes all the difference. So it's hard to really predict. But right now, big money has a big problem. And I don't think things necessarily smooth out until big money's problems are solved. And at the moment, China is really screwing up the AI pump.
All right, Treasury Secretary and the U.S. Trade Representative met with reporters just about an hour ago. They warned about the potential impact of new trade rules from China, a plan they say could give Beijing complete control over the global economy. Now, all this as President Trump has threatened new tariffs and plans to meet with Xi Jinping later this month. Listen.
China's new measures include a rule saying that any product of which more than 0.1% of minerals consist of minerals mined or processed in China, one must seek approval from the Chinese government before trading it. Since many important
Let's hold on a second, because that really matters. It sounds like what they're saying is that if your product, your overall entire product has at least 1% of Chinese rare earth minerals in it, then you have to get their approval to trade.
1% of minerals consist of minerals mined or processed in China, one must seek approval from the Chinese government before trading it.
You can imagine how that's not going to work for a lot of people. That's a big deal.
1% of minerals consist of minerals mined or processed in China, one must seek approval from the Chinese government before trading it. Since many important semiconductors, for example, have these critical minerals, and semiconductors are in nearly everything, this rule gives China control over basically the entire global economy and the technology supply chain. This will impact artificial intelligence systems and high-tech products, but even regular consumer items like cars, smartphones, and potentially even household appliances could be affected.
You could see how this might have global liquidity a little upset. And as the U.S. escalates now back, because this is China's biggest leverage here, this rare earth issue is massive. This is one of the bigger cards China could play. And while the U.S. is invested in treasuries and the dollar and financialization, China has been stacking gold and rare earths. And now the U.S. realizes they've made a key mistake. And they've let themselves get played to a degree. Their hubris in their own building of some glorified financialization system let them get snowed by the Chinese, who've been stacking gold, preparing rare earths, building out factories, power building. The West just can't live with such tight controls on rare earths. It's going to be a no-go. And there's not really anything lined up to replace China's supply. While, yes, there's some in the ground, and Greenland is known to have some and all of that, doesn't change the fact refining them is difficult. And the machinery involved comes from like one company in some instances. That one company is in Germany, and that one company in Germany sources parts from one company in Switzerland, and that company in Switzerland sources parts from some place in China. I mean, I'm not even kidding. It is like very precarious to refine these things right now. It's the most fragile aspect of the ecosystem, and it's a huge, huge topic. So I don't think the U.S. is going to take it very easily, and they're going to use every bit of leverage they have. Anything they can scrape up, they're going to talk tough, and they're going to try to apply it. This was Treasury Secretary Scott Bessent today.
Make no mistake, this is China versus the world. They have put these unacceptable export controls on the entire world. China is a command and control economy, and we and our allies will neither be commanded nor controlled. They are a state economy, and we are not going to let a group of bureaucrats in Beijing try to manage the global supply chain.
So this, I guess you could consider as the opening dialogue by the U.S. This is their opening position, and they will use everything in their power to try to put pressure on China, even ridiculous proposals.
Shut down when we can't get 7 more Democratic senators across the line, but 85 U.S. senators are willing to give President Trump the authority to put up to 500% tariffs on China for the purchase of Russian oil.
Trust me, when the Treasury Secretary in a press conference says that they're willing to put 500% tariffs on China, the Chinese authorities notice that kind of stuff. So that's the opening line of dialogue, okay? And then Trump's going to meet with Xi later this month. Where that goes, how productive that is, it's pretty hard to say. But this could be turbulent. It really, though, comes down to how people decide to view Bitcoin in these conditions. Perhaps they view it as a safe harbor once again, since it's detached from government policy. They could only be so wise. Bitcoin Core 30 was released this week. This major update introduces optional encrypted node-to-node connections for enhanced privacy and also includes a massive increase in the op return data limit from 80 to 100,000 bytes, allowing much more than just financial data to be stored on the Bitcoin blockchain. The update also officially ends support for version 27 and earlier. While it includes performance upgrades, bug fixes, and a fee rate change, the most controversial change in here, as you are probably already aware, centers around the op return expansion. And as of this episode, when I was putting it together, my dashboard shows Core 30 at 1.8% of the network. So just shy of 2% of the network. Knots, combining the various versions, is around 21% of the network. Almost to 22. But 21, pretty great number. And then the remainder of the other versions are different versions of Core. So this is awkward. Bitcoin Core 30 has landed without any real resolution to some of the complaints that people clearly feel very strongly about. And I have noticed, I'm not thrilled to say it, but I have noticed there has been an uptick in the discussion around soft forking. And this very situation is something that Start9's CEO warned us about back in March. And I thought we'd play that now.
There is some controversy in Bitcoin right now, for those of you who are not aware, where that power, the ability to define standard and non-standard according to a variety of different criteria, is being dwindled away to a degree. The nodes only have 2 powers. They have relay policy and they have war. They have user-activated soft fork and user-resisted soft fork powers, which cannot be taken away from the nodes. So let's say you were a constituency of Bitcoin that had to deal with the nodes, because you do, because they have a rightful place, an undeniable place in Bitcoin's political ecosystem. The nodes only have 2 powers. They have the friendly way of enforcing certain types of transactions, and then they have the nuclear option. And so if the nodes are denied their ability to cooperate in a diplomatic, friendly way, and 90% of them want a certain type of transaction to be defined as non-standard, the only way that they now have to define that transaction as non-standard is to also define it as non-consensus. Which means the transaction, if that were to happen, if 90% of nodes wanted a certain type of transaction out of the Bitcoin network and they couldn't do it through policy, they absolutely, with 90% consensus, could enforce a consensus rule that banned that transaction for all of the future. So forget about being able to sideload it to a miner or circumvent the P2P network in one way or another. The nodes have the ability to nuke the transaction from existence. So in a way, and where I wanted to get to with a little bit more time, is this is sort of a call for people to node up, right, in the first place. Get yourself a node. You don't have to buy anything from us. I don't care about that. Get yourself a node so that you can be heard on the network, so that you have a voice on the network. And it's also a little bit of a warning shot to the other constituencies of the nodes only have 2 political powers. And if you take away the friendly one, they will be left with 1 power, which nobody wants. Nobody wants a nuclear war in Bitcoin. We don't want a contentious soft fork. But in the absence of the ability to create policy that divides transactions into standard and non-standard, all we can do is divide them into consensus and non-consensus. And if 90% of the nodes want something, it's going to happen. There's no force in Bitcoin that can offset 90% of nodes wanting something to happen. They are the ultimate power in Bitcoin. So anyway, if you want a little bit of political power and any of this is interesting to you, get a node, read up on this stuff, because unfortunately, there probably is a soft fork coming in the next couple of years. We hope that it is non-contentious and simply implements some really cool new features that everybody wants. But there's a bit of arguing taking place in Bitcoin right now. And if you have a stance on that argument, the only way to be heard and to make a difference is to node up and choose the policies and consensus rules that you yourself believe in. Thank you very much. Sorry,
I would +1 his call to node up. Have a voice in the network. If something like a soft fork does present itself, then you have a vote, you have a voice. I'm not convinced we're headed for some sort of Bitcoin civil war just yet. For one, you could just not upgrade. You could stay on Core 29. It's still going to get fixes for a while. They just deprecated 27. So you could stay on 29. It's getting bug fixes. You could run knots. And if knots pisses you off, you could switch back to Core. And you could probably switch back to Core 28 or Core 29 for a while. So, I don't know. That's where I'm at with this. What do you think? Am I just oversimplifying this? Is this going to lead to a soft fork and a civil war? I don't know about that. To me, it just seems like once the dust settles, we're probably going to look back at this and think it was a bit of an overreaction. The stuff that's going to be really dramatic is if you do get CSAM and stuff like that in the blockchain, and then people make a big deal about it or something like that. But I don't know. I'd like to get your read. What's your temperature? Am I oversimplifying the situation? Boost in and tell me if you're satisfied where things are at this moment. There's a lot more show coming up, but first, I just want to say you can support the show by doing what you might already be doing. If you're buying sats on River, one of the best places to stack sats in the U.S., I have a link in the show notes that supports the show. You click that first, you start stacking, supports the show. Now, if you're all about self-custody and you're in the U.S. or Canada, the Bitcoin Well, it's an amazing automatic self-custody platform. You go directly to and from your own wallets. They don't even host the wallet. I love that. If you're ready to spend some sats and you have them on Lightning, the Bitcoin Company, link in our show notes, gives you access to hundreds of gift cards in just seconds. You don't even have to log in. You just use your Lightning, boom, you're in there. And you get a gift card, boom, you're spending it. Now, I think one of the best ways to stack sats is just while you're grinding out your daily life. And the Fold card helps you do that. You stack sats while you pay your bills, things like that. Fold card's great. Big favorite in the audience. Then last but not least, if you need to get access to your Bitcoin value without selling it, consider Salt Lending. They allow values lower than, say, Strike. And they have things that let you take advantage of wipeout protection. It's a crazy system where they'll convert your Bitcoin to stablecoins for a bit and then back when the market crashes. Not a big stablecoin guy, but I like that more than getting margin called, so that seems like a pretty great feature. And Salt Lending's been rolling that out. They have that protection now. None of them pay me to say any of that crap. I just use it, and I think you'd like it too. It's a great way to support the show. Links in the show notes. And we did get some boosts. And Adversary 17 is our baller booster this week with 90,000 sats. Hey, Rich Lobster! Adversary sent in 90,112 sats. This was an amazing episode. Thanks for having Oscar on. Yes, talking about the Oscar episode. I like these interviews. Keep them up. What website do you use to see node statistics? Usually a mix, but Clark Moody's dashboard is usually one of my go-to, but there's several dashboards, and then I have a custom one I've been working on that just sort of pulls in my stats that I am loosely vibe coding, I will admit. And then last but not least, for the big one, 65,000 sats, Adversaries writes, for my first ever fully custom Docker image, I decided it'd be fun to build knots from source. Now I'm running both core and knots. Stay tuned for an update. Wow. Talk about doing the proof of work on that one. Well done, Adversaries. I'd love to hear an update on that. And if you notice anything between them in particular, I would be surprised if you did, but would love to hear if you do. Thanks for boosting in. Appreciate it. J-Cube's here with 61,000 sats.
I hoard that which your kind covets.
J-Cube writes, I'm currently running knots on Umbrel. I was running on Nix Bitcoin, but couldn't get the swap to knots from core to work. I'd love to see an example of that config. I'm going to choose to run knots for a while at least because the core devs are going full big government on us. If they undeprecate an option, I may swap back. I will take my dip as an opportunity to get more sats. Yes, right? Take the dip. I agree. And enjoy Texas Linux Fest, J-Cube writes. Thank you, J-Cube. I don't really have a config to share at the moment. I'll talk to Wes about that and see if we can't cook something up in the near future, though. And thank you for the boost. OBL9118 comes in with 50,000 sats. Just says Boost McBoosterson and also Run Knots.
B-O-O-S-T.
Boost! Thank you, sir. Appreciate that. Appreciate the value, too. 40 Deuce comes in with 42,000 sats.
The answer to the ultimate question.
Chris, thanks for the value you provide on the show, and I hope you all have a great road trip down to Texas. The way you tend to structure the show with macroeconomics overview near the beginning and then getting deeper into the Bitcoin weeds later on in the show makes it much more shareable with friends who are interested in investment and economics but haven't been fully bitten by the Bitcoin bug yet. I find that alone useful and valuable. Keep up the work you do. It's deeply appreciated. Well, thank you, 40 Deuce. I think that's a happy second-order effect of trying to set the context and the framework of which you find Bitcoin in today, right? So I start with the macro because it then leads into what's going on with Bitcoin. And I think it's a bit that a lot of us can easily overlook. And it's also, I could spend a lot more time. Like every episode, I'm cutting macro. I really am. I cut stuff out every episode because I could make the whole episode about it. And I don't want to do that either. I'm here to talk about Bitcoin. But trying to find the balance, kind of where it all clicks together, that's sort of, I think, what I get the episode just right. Thank you, 40. Appreciate that. VCP comes in with 20,000 sats. I am minutes away from addressing a 250 AG policy people. Oh, cool. In Manhattan. Oh, in Kansas. Manhattan, Kansas, huh? Is that a cool place? I want to look that up. I'm going to tell them something they're going to resist. Those that engage in Bitcoin today will be the farmland owners of tomorrow. Ooh. He says, I owe a large portion of my ability to explain Bitcoin to your work on Twib, and I'm boosting to say thank you. Your work is echoing into the world. Oh, VCP, that's super cool. And I love where your head's at. I think about this a lot. I have family members that moved north of Seattle, like an hour north of Seattle, 40 years ago when it was nothing out here, nothing but empty land. And they bought up so much choice land, and they took some risk to do it. They were not rich. They had to work very hard, and they had to leverage up to their eyeballs for a while to pull it off. But now they own these massive chunks of land. I would love to talk to them about it. Never really got the opportunity. Would love to just pick their brain. And I view a similar opportunity happening right now in Bitcoin. It's a land grab in Bitcoin right now. It's the same exact thing happening, but just in a different asset class. It was real estate for the boomers and the boomers' parents, and it's Bitcoin for the generations that are, looking for it now. It's multiple generations. It could even be for boomers, although they tend to sell at the bottom and buy at the top if you go by the ETF stats, but that's probably just the ones that play with the ETFs. And I think it's really important because I don't have access to that real estate now because it's all gone. It's all like if you look in Washington State, try to just find a piece of property for a decent amount of, like an acre. Try to find an acre. Just in Western Washington, try to find an acre as a little experiment. If you live somewhere that's not very populated, not very dense, go have a little fun at Chris's expense and go look at just property and house prices in the Pacific Northwest. Right? That opportunity is pretty much closed. And I can't believe that. As somebody who has bought and owned 2 homes, I thought I would have 2 more homes by now. It's just crazy how that real estate has gotten so far out of the reach of most people. But Bitcoin is our opportunity today. And I'm really glad you're out there talking about it, VCP. Good on you. Appreciate that. And thanks for sharing. Gene Bean's back with 2,896 sats. He says, I quite enjoyed the chat with Oscar, and I loved the music in the background after the boost. Keep that up. Oh, yeah, the cha-cha music? Yeah. Okay, I'll play that for you this week, Gene. And says, by the way, don't take my minimal boosting and possibly reduce streaming for me as signal. All right, I won't, Gene. I won't. Some of us get tight, I understand. Although I have been wondering how you're doing, so thanks for the check-in. It is really nice to hear from you. Paranoid Coder's here with 4,000 sats. One of the things that keeps me, he says, from switching to Fountain is the lack of a desktop or web support. I'm not going to pretend that adding a new platform support would be easy, but so many other podcast apps have a desktop equivalent, and a lack of one is a core miss with my existing flow. I still want to support the app, though, and I continue to boost through it. I used to be that way too. It was one of the big reasons I went with Pocket Cast for so long. But as time has gone on, the speakers on my phone have gotten so good that I don't find myself switching to my desktop to finish a podcast when I arrive. And if anything, I'm putting headphones on now. So it just hasn't really been a big work. I think it's a workflow thing, and when you can adjust, you can get used to them. But I hear you. It would be nice to have like a web player sync. Maybe one day. You never know. Technology's out there, Paranoid. Thanks for the boost. Hearn88's here with 4,500 sats.
Fun will now commence.
He says Sailor was right about ossification. Thank you. Thanks, Hearn. Perhaps he was. Perhaps he was. Northern Hodl's here with 5,555 sats.
This is the way.
He says, thanks for your continued efforts. You're doing a bang-up job. Win, Pamp. I know, buddy. I know.
The traders love the vol.
Hey, you love the vol, right? Buy the dip, right? Yeah. I know. The issue is, of course, what I outlined earlier. The things I outlined in the macro section. Whew. Just take a deep breath. Go outside. Enjoy the nature. And before you know it, the Bitcoin will pamp again. Thanks, Northern Hodl. Appreciate it. Hello there is there with a row of ducks, 2,222 sats. No message, just value, which I appreciate. Ace Ackerman's here with 3,333 sats. That's probably a McDuck.
Quacka waka, it's a treasure.
Christine Lagarde is a kook. Oh, and have fun on your road trip. Thanks, Ace. Appreciate it. Morph Sausage is here with 4,444 sats. About the digital euro, I have to admit, the responses from Ms. Lagarde were very poor and uninformed. However, some privacy is indeed there because the idea is you could transfer payments directly from device to device offline without a server connection required, just like handing over cash. In my mind, that's actually a competitor to Visa or MasterCard. Currently, there is no EU payment provider in EU like MasterCard. And I don't mean to be offensive, but with the current political situation in the U.S., I think a lot of EU citizens are happy with such an arrangement and no dependency on a U.S. company. I think the government is looking for a solution. He says, but I do not see it as a response to stablecoins. Interesting. I heard otherwise, but I very appreciate that perspective. Thank you, Morph. That's really interesting. Army Guy 6902, I think, is along the same lines there. Let's bring in Army Guy.
Coming in hot with the boost.
3,000 sats. With regards to the digital euro discussion, whether or not privacy is intended to be upheld or not is irrelevant. If you wanted privacy, we could just use Monero. If you wanted speed, you could just use a partner or use with Lightning with a provider. The truth is, the digital euro infrastructure allows privacy to be stripped away whenever they decide. It has been a while since I sent in the last boost, but I want to say keep up the good work, and I love the show. Thank you, Army Guy. Appreciate it.
Fun will now commence.
We're having fun over here. Appreciate that. Two good perspectives. Chance of Dizzy Spells comes in with 2,000 sats.
Tough little ship. Little.
Sounds dangerous.
Danger zone.
I enjoyed the bonus episode, informative and clearly presented. Here's a small value for value note. Wish I could send more. Appreciation for all your hard work. Well, thanks, Spells. Appreciate it.
Danger zone.
Bobby Pin's here with 12,000 sats.
Put some macaroni and cheese on there, too.
And Bobby Penn says, thanks for giving me the advice. I think it was in response to trying to get to 1 Bitcoin. I think I'm on the right path. I'm keeping my DCA at what it is. Interesting that you suggested keeping a stash in River. I was already doing that since they gave a little better on rewards, but I used that stash to pick up more at 109. Hey, time to fill up the reserve again. Staying humble and stacking sats. You did it. Man, within like 2 weeks, you executed on the idea. Bobby Penn. Yeah. For now, I'm pretty happy learning all the interesting technical aspects of Bitcoin and various apps to run on my node and how to integrate that with my home lab. Oh, I love this. This is the zone you want to be in, dude. Is there an OSI model-like tool to understand how the consensus layer interacts with mempool and how layer 2s like Lightning and Liquid can transfer sats without using block space? Boy, well, okay, so Liquid isn't technically a layer 2. People say it's a layer 2 for simplicity. Lightning is a layer 2 because it is settled on Bitcoin. All right, so where to start? Okay. I think there's some talks you need to watch on YouTube. And I would look up, you know what? Start with mempool policy. I think that actually will get you going in the right direction. So go on the YouTubes and look up how Bitcoin mempool policy works and gets set. And then later on, worry about Lightning and Liquid. Not nearly as important. Not nearly as important as kind of understanding the consensus stuff. And then like Liquid, sure. Lightning I would get to first. It's probably more applicable. Liquid is great for if you're trying to, in my opinion, there's lots of uses for it, but in my opinion, Liquid is great for if you have a lot of small UTXOs and you want to stack them all up in one place and then just do one transaction out of Liquid to your Bitcoin cold storage. So then what you end up is like a reasonably sized UTXO instead of having lots of little ones that you're going to spend lots of fees on in the future. That's where I think Liquid comes in clutch. There's some privacy involved too. I also really like Liquid for moving sats between my kids. Like if they do something and they earn 15 sats as a chore or 20 sats as a chore, I just move that over Liquid. They have Liquid wallets on their phone, and I send them a little bit. They get a notification. They love it. They can look at it, and then we can move things around real quick for basically no cost. And there are hardware wallets available for Liquid as well. You are on a great journey, Bobby Pinn. Keep us posted. I'm really enjoying living vicariously through your process. Keep it up. And thank you very much for the boost. Appreciate it. The Immunologist is back with 3,333 sats.
I like you. You're a hot ticket.
With the digital euro, independently on how it is presented, the goal is likely to have alternatives to PayPal, MasterCard, and Visa in the EU. Currently, almost all digital transactions depend on those American companies and could easily have political control exerted on them. In an ideal world, the digital euro would be a form of citizens for citizens payment, but it is at least another payment option. If private companies or the EU are better as a payment provider, well, then it's just a matter of debate. Okay, so the big context that you guys are giving me here is I didn't realize that you use Visa and MasterCard so much. That you didn't have your own equivalents over there. I never really thought about it, to be honest with you. I suppose there's the convenience of it makes global travel awfully nice. But I had not really given it much thought, I suppose, because I've never been to the EU. And so this is one of the things I would probably think about when I was there and noticing it, but it's one of the things you don't think about from afar. So I really appreciate just even that education you've given me today and the context. And it doesn't sound like it's nearly as controversial as something like this would be in the United States. I'm hearing kind of a mixed but not overly negative take on the digital euro. And so I hope you guys will keep me posted on how it actually plays out and any evolving thoughts you have. Also, thank you everybody who boosts below the 2,000 sat cutoff. I do read all of them and I keep them all in my show notes too for posterity. Appreciate that. I do the 2,000 sat cutoff just for, time on the air. And also, big shout out to all of you who stream sats as you listen. 49 of you just streamed those sats, and collectively you stacked 61,818 sats for the show. Thank you. I love the sat stream. I love seeing them come in. They come in 24/7. I'm working on my node. I'll see 5 sats come in. 5 sats come in. Somebody's listening to the show. While I'm working on my notes, somebody's listening to the show. It's so cool. All right, when you combine those sat streamers with our boosters, the show stacked a pretty reasonable 376,645 sats. Thank you, everybody who participates in the Value for Value system. I put the show out there for free. I hope it's useful to you, and then you return the value you find in it. Fountain.fm makes that real easy. Of course, there's AlbiHub, and then you can plug that into your app of choice. There's also some set it and forget it options with the show. To support us, we have the Jupiter Party membership, which is the Jupiter Broadcasting whole network membership where you get everything. That's jupiter.party. And then in Fountain, I'm working with their new membership system. It's a membership program just for the show, an individual program for the show where you do get access to the bonus features, the early stuff when I put it out there, and you get a badge in your profile. But also, we're kind of kicking the tires on a Lightning-based subscription system, which does mean you need to keep your Fountain wallet topped off for this to work. You could also plug it into your fiat bank card if you want. But nobody else does this right now. And Fountain is doing it all with open frickin' standards. Now, they're the only ones doing this stuff, but if we can prove the way, others may very well follow along. And they will be able to implement this stuff because it's just standards, RSS feeds, and author identities, things like that. So there is a subscription membership system available through the Fountain app for this show as well. And we're kind of trying out something that could be a revolutionary way for content creators to run memberships. All right, in the updates section, we're going to do a little bit of a banker blowout. They've been going out and saying a lot of things about Bitcoin and crypto, et cetera, et cetera. So I'm just going to do a hot run down a few of them, and then we'll get into some serious news about the DOJ and the Bitcoin reserve. So let's start with Bitwise. They say a new country is stacking Bitcoin very soon. They're preparing, laying the groundwork, and they will be announcing something within a matter of months.
So what do I mean by that? We're chatting with a sovereign wealth fund who's interested in buying Bitcoin, but it's going to take them about 6 months to get through the process. So they own shares of MicroStrategy now. We were just approved at a $1 trillion bank in the US, their wealth management division. It's the first time they have access to a Bitcoin ETF. A lot of them have used DATs, MicroStrategy and others, to get exposure. There is an article in the Wall Street Journal about Mark Casey, the portfolio manager at Capital Group, who's the largest owner of MicroStrategy. Mark is absolutely fantastic. If you ask him, his mutual fund is only allowed to invest in equities. So he has a lot of conviction on Bitcoin, but he can't buy Bitcoin. So this allows him to express that view.
All right. Continuing our banker blowout, JP Morgan staffer confirms they are soon going to allow clients to trade Bitcoin.
Just in terms of another big topic that the banks are focused on, custody of crypto assets. I was speaking to Citi last week, suggesting they're going to launch their own crypto custody service. This is actually holding Bitcoin, Ethereum, and other tokens as well. When it comes to how you're approaching digital assets, how big a topic is custody right now? Is it something that you're looking to launch as well?
From a JP Morgan side, I don't think that's in the near-term horizon for us. I think Jamie was pretty clear at Investor Day that we're going to be involved in the trading of that, but custody isn't on the table at the moment. There's a lot of questions around our own risk appetite of how far we want to go down that path from trading and other sides of it, and then custody, I guess, would follow. But naturally, we need custodians, so we're exploring what the right custodians for us for the business footprint.
Man, there's going to be a big business boom for crypto custodians, but what they're saying there is they're going to allow clients to trade Bitcoin. Now, why does this matter? Because you and I, listeners to this show, you're probably not going to be buying and selling Bitcoin on the JP Morgan platform. But my dad is. One of the things that happens is Bitcoin gets isolated off into its own area. And so when you're buying and selling your ETFs and your stocks and your funds, you're doing this in your brokerage account. And that's where all the money is. And to get the cash, when you say you bought an ETF, you sell it off, and now you've got some cash, or you bought a stock, you sell it off, you got some cash, and you want to buy Bitcoin with that cash, you have to do the slow process here in the States of moving that money through different financial systems, sometimes setting it up, going through the verification process. It can take days, and by that time, the trading opportunity has completely passed. So if everything is in the same system, it's in the same brokerage account, if you can sell your stocks and buy your Bitcoin and vice versa, then that money is able to move between in and out of Bitcoin a lot easier. So it does matter, and it's a product people do want. It's just probably not a product you or I are likely going to use. Now, we continue the banker blowout. One more clip after this, I believe. And this one is your buddy, the Finkster. Larry Fink not only was on CBS News, but he went on CNBC and just went on there to brag about how IBIT is completely crushing it.
Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
I love it now. But I grow and learn.
I heard you say that on 60 Minutes.
I did say
that. Who could have seen that coming? That the Bitcoin ETF would be the most successful ETF in history. Who could have seen that coming? All right, and our last banker blowout clip. Your buddy Tom Lee has a theory on, at least partially, why gold is ripping. And I'll be honest, this is my bias showing here. I love this theory.
And the reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And do you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin They're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
I don't know if it's true. I love that theory. I love the idea that gold's getting pumped because of crypto. All right, now on a more serious matter, the DOJ has seized $15 billion in Bitcoin in the pig butchering fraud case that you may be hearing about. And I wanted to highlight this because I think this indicates perhaps the worst case scenario for how the U.S. government is going to build out the Bitcoin reserve. They're not going to look for revenue neutral ways to purchase Bitcoin. They're going to look for revenue neutral ways to seize Bitcoin. So this week, the Department of Justice seized around $15 billion worth of Bitcoin held by a man who oversaw the massive pig butchering fraud operation based in Cambodia. The seizure is the largest forfeiture action by the DOJ in history, the largest in history. The indictment charging the alleged scammer, Chen Zi, was unsealed in federal court in Brooklyn, New York. The U.S. government's Bitcoin wallet has also been updated now with 127,000 new seized Bitcoin. According to the people that monitor their wallets, the U.S. government's wallet now holds a rough 324,780 Bitcoin. And perhaps this is how they build out their big old Bitcoin reserve, is they seize Bitcoin. And you suppose as it gets more valuable, they get more aggressive? And perhaps as different government comes in with different policies towards Bitcoin, they get more aggressive. And if the social situation continues to deteriorate and they're looking for people to blame and they need something to do to alleviate the debt situation, do they become more aggressive with the seizures? See, I think this is worst case. I almost would have rather they spent tax dollars to buy Bitcoin. I'm not a big fan of that. So let's shift gears. I wanted to go into more on this large liquidation event that happened on Friday. Just a bit more context, because the Hurdle Rate podcast boys were watching the markets live and doing trading when this crash happened. So they talk about their experience in real time. And they also get into the linchpin sort of at the center of this massive market drop and why things started to just seemingly fail and crash so hard.
It's been wild this weekend. The crash was pretty impressive. When you see those cascading liquidations, a lot of us were on a call while it was happening live, and you're starting to see the weakness hit the market and Bitcoin draw down, and it doesn't really hit you as any big deal because that happens a lot in Bitcoin, right? We've seen lots of these liquidation events, but then all of a sudden you start to see the book get really thin. And all of a sudden Bitcoin's jumping around by the thousands of dollars within seconds. And it was pretty clear that something along the chain had broke. And almost always when you see this type of price action, it means the leverage is getting hit. There's a reason why most people should never touch leverage when they're trading cryptocurrencies. And this is the reason. It's because you've got these automated liquidation engines that are driving all of these trades. And as soon as one cascades into the other, you start this chain of events. And what was really interesting with that post that came out, and it was by a guy named Elon Trades, was it showed effectively the trail of what happened and how all of this was effectively triggered by a coin called USDE with $60 to $90 million being dumped on Binance and causing the initial liquidation on Binance. But what people were really focusing on was the tie to the larger macro event, which was the tariff announcement from Trump. And it just was, when you see things that seem too orchestrated, there's the old saying, somebody always knows something. What a way to mask this type of an exploit. And it was interesting because Binance had already identified this exploit and they had communicated that there was a patch on the way for it. And so there was only an 8-day window where this all would have been possible. And they managed to do that Friday afternoon, right after the markets had closed. You immediately get the news of the tariffs hitting. You start getting initial weakness in the market. You start this liquidation cascade. Everyone ties it to the news out of the White House, even though that would have been surprising, right? Because this is not our first tariff rodeo. I actually think one of our very first episodes, we were talking about tariffs then, and the markets were getting hit by the tariffs at that time and then bouncing back and recovering much like we saw today. But it was one of these perfectly timed executions to exploit the collateral engine on Binance using that USDE token and causing the forced liquidations, which ultimately I believe amounted to over $19 billion, which is larger than the FTX collapse. It was larger than anything that happened with COVID. It was the largest drawdown or liquidation that you saw within the crypto complex. So it was a really major event. And I think what was ultimately interesting was when you watched it play out, maybe we've just been around this too long, but it didn't really feel like that much. You watched it, it didn't pull Bitcoin under 100, although on some exchanges where it got really thin, I did see that there were some trades that were some orders that were filling right around 100. So it drew it pretty low. But Bitcoin overall, people stepped in on the bid. There were buyers on Bitcoin. And you didn't see that with all the other tokens. A lot of the other altcoins that were out there drew down 70, 90%. You saw some really major wipeouts happen in that side of the house. Bitcoin overall showed pretty good resiliency, bouncing back from that very quickly. It did not hold down there very long before it had recovered back to the 112, 113 range, ultimately getting above 115 here. And it was a good battle test, I will say, for Bitcoin. It shows when everything really starts falling apart around the crypto industry, I think what you saw over the weekend was where that capital rotates to. There's a fleet of safety within that overall industry, and Bitcoin is the most established and the most liquid of all the digital assets that are out there. And when panic and chaos hits and all these other ones, I think what you saw was that capital goes to where it believes it to be safe, which is in Bitcoin. So I thought that was actually a really good highlight for how Bitcoin can withstand what most others cannot.
And I think that might have been the signal that got lost in all of the excitement about a big crash is Bitcoin's dominance shot way up. The crypto industry bailed into Bitcoin. They know deep down that Bitcoin's the only true crypto asset. And they know it, and they bail. And I think that's the real signal when you look at that crash. Well, if you couldn't believe it, we're already at our final clip of the week. Feel like we just got together, back together again, and I gotta go. But there is more to do, I suppose. I like this clip, though. I think it's a good final clip of the week because in one clip, it really shows you how stupid the tulips argument is. Every now and then people still call Bitcoin tulips, which was a bubble that lasted for a very short period of time. But it's a dumb thing to call Bitcoin. And this clip not only knocks that one out, but also kind of makes it clear why it's more risky to not own Bitcoin than it is to own it.
Like, everyone goes, Bitcoin is a bubble. It's tulips. Okay, tulips was the bubble in tulips in Amsterdam in 1630. That bubble in Amsterdam, where is the center of the global flower industry today? It is in Holland. The Netherlands has been the center of the global flower industry for 400 years. That tulip bubble brought 400 years of prosperity to Amsterdam. So to call it tulips is actually a compliment, not an insult. And then you go, what is a bubble? Well, I'll tell you what a bubble is. A bubble is a bull market in which you don't have a position. It is a psychological way of justifying that you didn't invest in something to call it a bubble. So you can call it a bubble and you can dismiss it. But the potential of Bitcoin to be the default cash system of the internet and the default savings vehicle of the internet is so extraordinary, I would argue that the risk is not owning Bitcoin, the risk is not owning Bitcoin, if that makes sense. Everyone should have an allocation in their portfolio. And don't try and use the fact that I don't understand it as an excuse. Because most people don't understand how the combustion engine works, and they still own a car. Most people don't understand hypertext transfer protocol, and they still use the internet.
All right, let's check in on the state of the network as I'm wrapping up at block height 919,233. Bitcoin's price to US dollar, one Bitcoin is 111,280. That puts our sats per dollar right at 899 sats to one US dollar, which makes us down 11.8% from our all-time high. That was 126,180 US dollars 9 days ago on October 6th, 2025. We have a difficulty retarget date coming up, October 15th. 3% downward adjustment. It may have already gone in by the time you hear this episode. So that's probably a pretty accurate prediction. Reachable nodes on the network right now, 24,565 nodes. Core 29.1 at 15.2% of the network, and knots at 21% of the network. Let's see, and just checking live, Core 30 clocking in still at 1.8% of the network, 443 nodes. I say go stand yourself up a node. That's your homework. If you haven't done that yet, or get AlbiHub going. And get yourself a voice in the network. The network could use your voice to make it even stronger. If you made it this far, links to what I talked about are at thisweekinbitcoin.show. That also takes you to Jupiter Broadcasting, where I have my other great shows. My goal is to try to create something that doesn't get distracted by the emotions about what's going on, but just focuses on the signal for you, so you can be as informed as possible and make the best decisions around Bitcoin and all the things that Bitcoin impacts in your life. So let me know how I did with a boost. You can also tell me what I missed, what I should have included, or anything like that. And I always would love to hear more segment ideas or future segment ideas. Love those in a boost as well. Now I'm going to leave you with a value for value track, as I like to do. So if you boost in while this music plays, 95% of your sats will go to the artist and their team. Now this is off the album In Another Life by artist B Glass, and it's their track, Spook.